central banks began buying gold because they were making two core assumptions. The first assumption was that the US dollar would continue to be devalued. And the second assumption was that US geopolitical strategy would be less predictable in the future than it was in the past. So unless those two assumptions are no longer true, the gold thesis from that standpoint is still intact. That will keep the gold price elevated, and that will continue to produce quality quarterly earnings for all the gold producers, which will mandate the biggest institutions in the world to have an allocation to this industry that is one of the only to be generating significant amounts of cash right now. And so it always takes a few quarters of earnings reports before Wall Street begins to develop mandates for increased exposure to an industry. And we're getting there now with the gold sector. And will continue to be, because a lot of the projects that we're watching today were put into production at $2,000 gold, $1,800 gold, and so we could knock $500, $1,000 off the gold price, and they're still more favorable than they were 6 years ago. I don't think that's going to happen, but the point is it takes, 3, 4, sometimes 5 quarters of earnings before major institutions are mandated to move in because their shareholders are demanding it.